happy April. Happy end of Q1. Also, this isn't an April Fool's joke. Alert, no April Fool's joke. Happy gotcha / birthday to Daisy, my puppy. It was 10 years ago, April 1st, 2015. I had gone to, I had found her on Pet Finder. I think I still have it. If I have the webpage, I'll link it out. But I found her on Pet Finder, I think, or I think it was Pet Finder, and I think the listing's still up there. But the story that I got was she was a breeder dog. She was dumped in a dumpster by someone who may be the breeder. Don't know, but she was found in a dumpster with the damn top down. I mean, imagine being a little puppy. And they did fix her, and they said she was probably 2 or so, and she had complications. It was clear she had complications with puppies, but poor little girl, she's happy as pie. I mean, I can bring her up here, but she's the shy one. She just lays in bed and sleeps. But 10 years, good thing. And it's not no April Fool's joke. Let's get started with some facts about Q1 and about this year so far. If you didn't have CVS as your top stick in your top stock in your portfolio, like I had told you all Q1, CVS was the one. You know why? It's the receipts. CVS is the number one stock that you should have in your portfolio. And when number 2, another fact, when Michael Burry says to short the market for the 100th time, you absolutely should listen and short the market. He's absolutely 100% right. The market should be shorted like that. And by the way, the market, fact number 3, the market is your friend. If you work really hard at this, you are guaranteed success, 100% success in the market. There's nobody who's ever worked hard and failed in the market. Fact number 4, only the people who have doubts fail in the market. If you believe and you manifest this and you create one of those boards, you're going to succeed. Absolutely. Fact number 5, Jim Cramer knows pretty much everything. And he knows everybody. He has incredible insight into the direction of the market, has been spot on for years, and you should join his investment club because nobody has better returns. Not even the S&P has better returns. VOO doesn't beat Jim Cramer. Fact number 6, probably the greatest investor of all time, Sam Bankman-Fried, who is innocent of all charges, should be pardoned. It was just bad timing on his part. Fact number 7, Trevor Milton, the former CEO of a company that famously rolled a truck downhill. Absolutely. He just got exonerated. By the way, that is a fact. And he did nothing wrong. He contributed to Trump's campaign. So he was absolutely innocent. Fact number 8, being so close to tax time, understand that paying your taxes is voluntary. Go and listen to the tons of YouTube videos that tell you that taxes are absolutely voluntary, that you don't have to pay them. If you're worried about it, you're just one of the sheep. Don't follow. Fact number 9, tariffs are not inflationary. Just because we sell mostly services to European and other markets at a 90% profit margin, and they sell us cars and manufactured goods at a 5 to 10% margin, we absolutely should be manufacturing and creating low margin products here in the US, 5 to 10%, and giving up all of those sales overseas with the 5 to 10, the 10%. Yeah, there's no inflation in this. Pulitzer Prize winning economists that tell you they're inflationary are wrong. Because somebody was just appointed by a president who was a game show host. Yeah, they're all wrong. He's right. Yeah. 9 facts for your April Fools. 9 facts for your April Fools. Yeah. Let's start out with a fire tip. Because I think a lot of people tune into this to live that financial independence, retire early life that I've achieved. It's been great. But let's just say you are 23 years old and you have $2 million. Are you set for life? Excuse me. Long story short, probably not. And this guy, Nick, outlines it great. He outlines it fantastically. It can last for a lifetime, but it also can't. So understand that when I posted, hey, if I had to do things over again, if I lost everything today, my number one thing that I would do is still have a job. And the reason is you need income. And so even if you had $2 million and you were at 23 years old, are you set for life? It depends on where you put that money. You could put it into bonds because remember, bonds, you keep your principal. You just get a percentage every year, every month, whatever it is, but you keep your principal. So they're the safest, but you're going to have to live on a fixed income. Or if you risk it, you may start drawing down your principal to actually live on. So it's a great article. I thought this was really, really well laid out. And I think it's a good question for a lot of people. If you got $2 million today, could you actually live on it for the rest of your life? $2 million to some people is a lot of money, a tremendous amount of money. And I shouldn't say that. To everybody, it should be a tremendous amount of money. There are very few people that it's not a lot of money. But at 23 years old, it's probably not enough. And I would tell you, if I had $2 million at 23 years old, I think I would have been, first off, ecstatic and jumping for joy. But second off, I would be smart enough to know that I've got to continue to grow that money and I've got to live on a certain amount of money. So again, financial independence, retire early. I had somebody this weekend ask me for the podcast that I did. It's 3 episodes. Because honest to God, all financial independence, retire early is make sure you're maximizing your income, minimizing your costs, and then figuring out where the money goes in order to grow and provide you a lifestyle. Money works for you in financial independence, retire early. So it's just about that, whether it's real estate, whether it's stocks. I have stocks. I've chosen stocks as my thing. So tariffs are not priced in. Just so you know, this is a quarterly chart of the S&P, and I'll look at it again. I'll put it into Trendspider so you can see it a little bit better. I posted this on Twitter yesterday. Tariffs are not priced in. Okay? Volume spiked during the housing crisis. That's 2008, 2009, back there. Okay? COVID doesn't even look like a downturn in the market. This is SPY. This isn't QQQ. QQQ, if we look at quarterly, it's even more down to the bottom left to upper right. Okay? Tariffs aren't priced in. Last month, you were down 8.8% on the Qs. Seems horrible. That doesn't even look like a downturn right now. Okay? 2022 looks like a downturn. 2008 to 2009, that looks like a downturn. Tariffs are not priced in. Just be ready. Okay? It's a coin flip tomorrow as to what's going to get announced, or it might happen today. But tariffs are not priced in. If you're using the 4-hour algorithm, because again, look at the performance down below. Makes you 46% versus 49% buy and hold. Now, the algorithm got you out. Is it going to save you from further downside? Maybe. The weekly, it looks like the MACD line, which is blue right there, is down below the oscillator. The strike line, which is yellow, is not even down below the oscillator. Okay? The last time we had it down at this level, we were on our way up. We weren't on our way down. We are on our way up, and that was 2023. It was a different market. So just be ready. Because again, when you pull back and you look at this, we haven't even begun to actually reset the economy. And that's what the Trump administration wants to do. So get ready. Now, are you surviving a retest of last year's breakout? Because when you look at the yearly candles, it doesn't look like a breakout. It doesn't look like anything. Pull it back and go to yearly. And you can see the cues. We haven't even begun to go back to the 9-day. The 9-day is at 336. Again, moving averages will help you. Now, does this mean the market will crash back down? No. No, but you want to be prepared for this because Brad Gerstner says the Trump economic detox correctly reduces government spending and rebalances U.S. trade. But CEOs are worried about economic shock therapy that causes massive uncertainty and risks recession. $1 trillion in tariffs and $1 trillion in budget cuts. That sounds great because it's at zero. And so your budget, you're not spending anything. It will send the markets and economy lower. Absolutely. They are tuning this economy. So get ready. We'll go over some of the details. Okay. It was clearly oversold yesterday. We finished Q1. SPY was down 4.7% in the quarter. March was the worst month. Or I'm sorry, 4.77% in March. It was the worst month since December 2023. And if you don't remember December 2023, that was bad because people were selling for all the tax loss. They were selling for the tax loss and the tax gains. They were rebalancing their portfolios. In March, nobody rebalanced their portfolio. You should be. You should be rebalancing your portfolio. Go and check out the newsletter from yesterday, okay? One question to ask yourself if you feel like selling. This week will be all about tariffs. And the one question that you want to ask yourself is really, is this stock that I'm holding good enough? Go down here to the pod notes and write in the pod notes, the VIX, blah, 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 rebalance. Is the stock market, yeah, don't hope and pray. The one question you really want to ask yourself is my money best suited in this stock? If you don't think that the stock that you own is best suited to go through this and 5 years from now going to be up, you should be out. So again, make sure you have the tools in your toolkit. You know, a plumber doesn't show up to a house with just a hammer. You need tools. You need charts. You need a fundamental look at the market. And if you don't understand it, remember, Seeking Alpha has a fundamental tool. It's called the quant. And it helps you understand the value of a stock, the valuation of Apple, the largest stock in the stock market. Okay, the valuation's an F. Why? Because they don't have enough earnings to justify the amount of shares that are out there. And the times the PE, the price to earnings, is 30 times. The sector's selling at 20. It is expensive. You have to understand that. And if you don't know fundamentals, this factor grade is great. It breaks it down. The quant breaks it down into 5 sectors: valuation, growth, profitability, momentum, and revisions. And you get an analysis with AI. You get an analyzer who basically puts together a report for you about everything that you need to know about this stock. Okay? Plus, you get to look at Wall Street. And what do they say it's worth? $252. That's 13% upside. Has anybody brought their price on Apple down? No. So again, have the tools in your toolkit. If you want any of these tools, go over to Linktree. The first tool I talked about is Trendspider. If you sign up for a yearly plan, you get my 4-hour algorithm. Okay, you get all of the algorithms that I have that I share with you. You get the watch lists and you get the scanners that I use. We'll go over all of this. Now, the other links in Linktree, Seeking Alpha Premium, the bundle. We just talked about premium. Alpha Picks, a data-driven portfolio of stocks, one on the 1st, one on the 15th. We're going to get one today. And you buy 1% of the portfolio of that stock. Now, the performance of Alpha Picks has been fantastic. A fantastic return. Now, if you don't want the bundle, you can get them individually as well. And Seeking Alpha Premium with the quant comes with a free 7-day trial. Trendspider, in fact, actually has quarterly deals. I don't like these 2-week deals, but if you just want to try a charting program, go and get it. $19, okay? Some of the newsletters, like this newsletter, has a 1-hour strategy. I looked at it yesterday. There were two that had entries on this 1 hour strategy that traded well, GILD and Pepsi. So if you want to try trading on just a chart, get Trendspider. And you can sign up for that 2-week trial, import this strategy, the one stock battle 1 hour strategy, and you can see how it performs on KINS. The strategy performance, 14.8%. Okay, versus buy and hold at 1.3%. You can try it. If it's not within your wheelhouse to do that, then you've only invested $19. So have your toolkit available, because part of what you're going to see is volatility. S&P 500 exits Q1 in the red. Here are the largest winners and losers. Are any of these decliners on your list? Deckers, On Semiconductor, Tesla, Teradyne. I own Tesla. Okay, that's the only one in that decliners that I actually own. Now, advancers, like I said, CVS, I've been pounding the table. You should absolutely have this in your portfolio because I like long receipts. CVS is up 50% in the first quarter. Okay, Philip Morris. Do you smoke? It's up 31%. It's because of sin. It's because of that sin stuff. Newmont, which is a gold miner. I own this one. Do I own it as a large portion of my portfolio? No. But it's up 30% in the first quarter. AT&T. Somebody asked me, can you look at AT&T? I told them my dad retired from AT&T. And if you want to know about AT&T, take a look at a monthly chart of AT&T. Okay? Because if you go back to 2000, this stock was trading at $40, over $40. So if you bought in 2000, congratulations, because 25 years later, you've lost 50% of your portfolio. So I'm not arguing that it hasn't been a great winner of recent, but you want a good company with good products, with good profits, and good management. And so far, over 25 years, these guys haven't had great management at all. Nothing. They've gone into debt. They've bought businesses that they didn't have anything to do with. They shouldn't have bought DirecTV. Yeah, we're going to create a turnaround. No, you're not. You're just going to waste money. Con Ed, Vertex Pharmaceutical, Brown & Brown. There is nothing in this top advancers that I own or I ever talked about other than NEM. And that was a recent buy. So understand the market is going through some turns. And tech may not be a great one. My largest exposure in ETFs, XLK and XLY. And I'll bring you over to Seeking Alpha. This is just a screenshot of Seeking Alpha, okay? XLK is down 8% in the quarter. XLY is down 9%. They are the two worst performing sectors. So yes, I am hurting in this market. Okay? XLK is mainly the Mag 7, Apple, Nvidia, Google, Microsoft, Meta, Amazon, and Tesla. Okay? I own a lot of those stocks. XLY is Amazon and Tesla. Now, does that mean you throw this one out? You go over to Seeking Alpha and you go to market data, and then you go year to date right here, and you can see technology down 11.2%. Consumer discretionary 11.9%. And over 1 year, it's no better. Technology is actually down 0.8%. XLK. Now, consumer discretionary is up 7.3%. That's not bad. But if you sort 1 year, utilities is up 20%. Financial services, XLF, is up 18%. Communication services is up 18%. Even real estate, which was a dog, is up 5% over 1 year. So understand what you hold. I am perfectly fine holding these things. It doesn't mean you're always going to win, but understand what you're holding. That's the key. Now, Ryan Dietrich, who I really like and who has been spot on. No, you should never invest purely on seasonality, but it is worth noting that after the 7 worst Marches ever, April saw stocks in the green each time. 2025 so far ranks as the 4th worst. Look at all the green in April. Okay, 1953 and 1974, the only two that were down. Does that mean that you go out and buy? No. The good news, April does better. The bad news, the rest of the year, is weaker across the board. Okay, the rest of the year, look at all the red in the rest of the year. So this is the Q1 stuff. And you can see April, after a Q1, it's usually pretty good. You know, Q1 in 1968 down 6.5, up 8.2%. 2020, which was COVID, you were down 20%. You recovered 12% in April. Just remember, a 50% decline takes 100% to get back to even. So you want to make sure that you have your book of business, your watch list, everything of that sort. And Stephanie Link is one of the best investors. I respect her. You watch her on CNBC. She is fantastic. SPX, that's a S&P, ended Q1 down 4.6% with worst performance in 3 years, with tech down double that. I'm buying. We are not in a recession. The consumer is in better shape versus prior slowdowns with solid jobs, wages, and savings. Not all is perfect, but corporate earnings per share will be better than the long-term average of 5%. Buy best in breed. She added Meta, which is a great buy in my opinion, under $600. NEE, NextEra Energy, Target, DH Horton, DHI. More to go over the next few days. The one in that list that I like is Meta. Okay, I like this one under $600. Am I buying it right now? No. I'm looking to buy it when the 4-hour algorithm gets me in. Why? 4-hour algorithm over 24 months, it makes you 101%. I'm happy with that. But the key point is it wins 54% of the time with an average win of 9.29%. Now you can see, just got out of a 13% win there. You had 2 losses. You didn't have confirmation. This one at 596, I did add some there. Did I take some off here? No. You just had the death cross, but you haven't had it on a daily. Okay, and I was on Spaces yesterday and somebody brought up, isn't the death cross time to buy? It's always been bullish. No, it means it's breaking down. And part of that was the death cross on XLK. Okay, when you go to the daily on XLK, you can see we just had, and I just went over XLK, we just had the 50-day cross under the 200-day. Now, the last time this happened was way back here in 2022. Was the death cross a good thing when you were trading at 156? Nope. 23% down over the next 2 months. So it's not always a good thing. It's not always a time to buy. But for the long term, if you bought at that death cross at, say, 151, you're at 206. What, 3 years later? Not horrible. 25%. It's not great, but it's not horrible. Again, you had plenty of time to trade through this one. Am I trading this one? No. I mean, I'm just finding stocks. The other one that I actually need to research is NEE, NextEra Energy. I like this one. I've liked this one for a long time. And the algorithm just got you in at $70. Does it make sense? Well, the algorithm makes you 20%, whereas if you bought and held 24 months ago, you lost 5%. Now, does it make sense fundamentally? Again, use the tools in your toolkit. I can go over here and I can see the quant says the valuation is stretched. Yes, it's a little stretched. When you go to the PEG ratio, going forward, they have a 2.72. That means that the growth isn't enough to be there. And you look at their revenue growth, it's down 11% year over year. This may be an opportunity because the factor grades are always reverse looking. Okay? Wall Street says that this one's worth $84. That's a 20% upside. When you go and you analyze with AI, it's headquartered in Juneau. This used to be Florida Power and Light. It's a utility company. So they compete against Vistra, which was last year's S&P winner, Constellation Energy, which has soared, Southern Company, which is mine, which is Georgia Power. So does it make sense? NEE's stock momentum is under pressure with a 6-month price performance of minus 20%. So for me, I would look at this and I would say, you know what? I want to go with this trading route until this turns into a bottom left to upper right on a weekly. You're just floundering around that 200-day. I want to invest in it during this time. I don't want to invest in it while it's under its 200-day. It just got the golden cross here. So it might be an opportunity. That's how you take these things and find them. Okay. Another one is you can import this scanner into your setup. Okay. I'm going to look at this scanner. This is a hammer candle scanner. Now, if you don't know what a hammer candle is, go and look it up. And I'm going to let you import this. Now, in the S&P 100, which I like, the hammer candle is on AVGO, which is Broadcom. I love Broadcom. Am I getting into this one? No. I should have gotten into this one, out of this one at that 184. I didn't. I got full of myself. Death cross came, and it's looking weak. Semis are looking weak. You look at a daily, and we haven't had the death cross yet. The Bollinger Bands are cinched up, and they're expanding out, and you're on the bottom side. That's never good. Okay. Do I want Intel? I don't trust Intel. Intel has been a loser. Look at a weekly chart on Intel. It's lower highs. I don't like it. Netflix, does this one make sense? Well, Netflix just got you out of the 4-hour algorithm. So the daily hammer candle, you can put these on a watch list and then find a strategy that makes sense to start adding. But I like doing that in Trendspider. Okay. And you've got a ton of scanners that you can go through. Look at all of these. Okay, this entire list. And you can just type in bullish. You can look up stocks. You can look up scanners. You can look at charts. Go and get Trendspider. I love this software. And you can import this from the newsletter, okay? Now, did someone forget to tell Buffett there's a market correction? This is Berkshire Hathaway. Okay, this is a weekly chart. So this is a long-term chart. This is anchored since COVID, up 210%. 5 years. Typically in a market, in a good stock, you want to double your money in 7 to 10 years. Okay? They didn't just double it. They went 200% in 5 years. 200% in 5. And yes, you've had bumps in this. You know, that 2022 downturn, it didn't stop Berkshire from going down. But you want to find an opportunity to get into this. You're at all-time highs here. Berkshire on the 4-hour algorithm got you in at 456. You'd be pretty happy right now if you got in January 15th, okay? 3 months ago, January 15th at 456, because during this downturn, you're now selling at 533. Find a strategy. And this is one of, Berkshire is one of the ETFs that you should have in there. Now, this is a great clip. Okay, there's two things that you should take away from this clip. And you can play it. It's from The Compound. It's Josh Brown. And sorry, I gave you the O face of Josh Brown right there. But there's two things. First, big companies don't go to zero. He said he can name them off the top of his head. I think it's Enron and one other one. But again, big companies don't go to zero. So when you're investing, that's why I like large cap stocks. And two, nobody gets rich through diversification. You stay rich with diversification. So now is the time to take some risks. He brings up JP Morgan. He said, did you know that you can buy JP Morgan for 10, 15% down from where you bought it before? And you may not be at the bottom. You may not be at the bottom. Look at that weekly. You may not be. It may still come down to this 200-day, 226, but at 245, you better be happy you didn't buy it at 280. 280 up there. So it's opportunities. You don't want to go balls deep into this. But again, this is a great clip, and it's just like a minute long. Go and watch it. Did you know there was an IPO yesterday? Newsmax. Now, if you're I don't even know Newsmax. I didn't even know there was an IPO yesterday. But Newsmax, let's go look at a 5-minute chart of this. Because if you look at a 5-minute chart, it was up yesterday 700%, 500 to, let's go look at it. Because it was crazy. This one was up 735% yesterday. In pre-market, it's up 50%. So if you just bought this at the end of the day yesterday, you're up 50%. Say you put $1,000 into this at the end of the day yesterday. You all of a sudden have $1,500 freaking dollars. That's pretty good. It was halted multiple times. So getting into this one might have been difficult. 6,171,000 shares traded hands. Okay, that's a great IPO. Versus CoreWeave, which I don't like. I don't like CoreWeave at all. CRWV. Okay, we can look at a 5-minute chart. This one failed. I mean, it just failed. And you've got a gap between 38 and 39. Would I buy this one right now to fill that gap? The answer is no. And the reason is I don't like the business and I don't like IPOs. But you can get lucky sometimes. 735. You almost had a 10-bagger on day one. Okay? Maybe you want to look for bullish engulfing candles. Import this one into your setup. Okay? 43 symbols in the S&P 500. So we're going to go up here and we're going to say engulfing. And you can see the daily bullish engulfing candle. That's the daily. They also have a monthly one. But you can pull this up. Alta with a nice entry there at 351. One Oak, a nice entry at 93. It's trading at 99. APD, nice entry there. VeriSign, which we went over yesterday, which is Buffett's number one this year. CVS, which is doing great. Walmart yesterday was up a couple percent. Got you in at 87. You have to make sure that you have these stocks available to you. Now, let's go over I'm going to talk my book here. And I'm going to talk tech. And I just went over how bad a Q1 tech has. Apple inches up as foreign branded smartphone shipments climb in China. Okay, it was up 1.94% yesterday. It's down 1% in pre-market. Nobody cares about this market until tariffs are announced. Okay? And when tariffs are announced, if we get into a tariff war, just understand it's going to be tough. The 4-hour algorithm over 24 months on Apple makes you 43%. So if you're nervous about Apple, you can trade this one for 43% over 2 years versus 37% if you buy and hold. I love Apple. I like adding it during the 4-hour algorithm. Did I do it at 213? No. Did I sell at 240? Yes. Did I sell at 260? Yes. We're in this range right now. This range right here. Look at what happened at the end of that range. I think this is what's going to happen because I do think that the second half of this year starts to get better. We will have some struggles during this earnings season because if you don't think that a CEO is going to come out and he's going to say, we don't know what's going to happen. And if that happens and all of a sudden they start floundering on their AI, spend, remember WWDC is in June. If we go and look at Apple of last year, between January and April, this one went down. What are we doing this time? We're going down. What happened between April and July? The stock soared. Just look at this. If you were able to time this one, okay, say you were able, that's 43% in 2 months. So imagine 43% from right here in April. Say we go back down to here, 210. If you go up 43% in 2 months, where are you at? Let's see. I'm gonna have to shrink this one down a little bit because we're even going out of there. If you go up 43% and we go there, okay, in 2 months, you're at $301. I don't think you're gonna get there. I don't think you're gonna get there. But is it possible? Could be. Maybe we just go down to this 200-day. Okay, maybe you go down to the 200-day and then you go up 43% from there. That very much is more likely. So I'm not adding to this one. I'm not looking to add, but I do think Apple's my savings account. Do I think you should buy it here? I don't think so. But I think if you're long-term 5 to 10 years, yes, I think Apple's still a good buy. Some of the best buys in the market, Google. Okay? Because if we take a look at Google and we look at a weekly chart of this one, you are getting this at the price you were in 2021. Okay. And this article came out yesterday. YouTube could be worth $550 billion. In 2021, you didn't have YouTube TV. In 2021, Mr. Beast had 10 million followers. Today, it's over 100 million followers. I don't even know how many followers that effer has, but you're getting this at significantly reduced price. And so if we go over here, we buy GOOG because remember, when they buy back stock, they buy GOOG. Doesn't mean that, we can chart this one against, we can select symbols and we can go GOGOL. And remember, those are the two. And the only difference is GOOGL has voting rights, but I guarantee you ain't getting voting rights with Sergey and those guys. Okay. Over 10 years, GOOG makes you 478% versus 463%. It might just be a timing thing, but because you can see over 5 years, it's almost exactly the same, 168% versus 166%. But we buy GOOG, and that's the reason. And if there's one thing you can take away from this podcast, it's that one. Remember, learn one thing a day, but it's just too cheap. Is the valuation still stretched? They say it is. But you're trading at 17 times forward earnings. That's not bad. Historically, that's not bad. Go and chart the historic PE. Go in Google and ask Perplexity, ask one of the AIs, what's the historic PE of Google? And it's 20. You'll see. It's cheap. Another cheap one, Amazon. AWS is worth $120 billion rate at 25% annual growth for the next 5 years and 30% net margin. It will make $110 billion in profit. At 20 times earnings, AWS alone is worth $2 trillion. That's just the cloud business. You're getting every other business for free. It's criminally cheap. So if we go and we look at Amazon, what does the quant say? It's a strong buy. The valuation, not stretched. This one's still growing. So you look at the growth and it's an A+. They're growing their revenue 10% year over year. And when you go and look at a chart on this one, you are at 2021 prices again. Remember that 188, you're trading 188 right now. That was long-term resistance here in July 2021, here in November 2021, and then all through the beginning of last year, it couldn't get above that. Even if it breaks through it for slight bit this week, if you close above 188, I'm not particularly worried about it. Again, the valuation makes sense. It's just getting taken down with the momentum of the market. Could we go down further? Absolutely, we could go down further. But you've got to understand the stocks that you own. Now, if you're worried about tariffs, Morgan Stanley just put out this list of stocks that should weather the tariff storm. Consumer discretionary. It's a super long list. Go and find some. Shark Ninja's on there. Okay? April 2nd, tomorrow, is Liberation Day. Make sure you have a plan. And just stepping outside my comfort zone right here is Visa. It's a bullish engulfing on the volume scan. Strong BTD action, gap down, erased, 50 SMA reclaimed, and outperformed. If you don't understand any of that, go and put it into AI. Go and ask Grok what it means. It's bullish. It's bullish. But is Visa a buy? Well, let's go take a look at the 4-hour algorithm. How does this perform? Well, 37% versus 55% buy and hold. So for me, I'd probably want to buy and hold or find a better way to trade this one. Maybe we could use the 65-minute algorithm. Does this work? No. Maybe the Goldman Sachs, this strategy that was given to me. Maybe this one works. Well, it makes you 104% versus 82% for the asset. If you just buy and hold, you win 83% over the last 5 years. Okay? Got you in at 340. You're trading at 350. So again, find a strategy that works. There are tons of them. If we go over to Seeking Alpha and we look at Visa, It's a hold in the quant. Has it been a buy? No, it's been a hold this entire time. So don't think that it can't go higher. Momentum is an A. Momentum, 3 month, you're up 10%. 6 months, you're up 27%. 9 months, you're up 33%. Remember XLY and XLK that are down? This one over 1 year is up 25%. Now, is the valuation stretched? A little bit. And you can go and look at Analyze with AI. What does it say about the valuation? It notably stretched with metrics like EV sales and price to book ratio significantly higher than the sector, indicating an expensive stock. However, its dividend yield is lower than the sector, which may affect income potential. So they're not paying out. And say you don't like this one, you can go and look at others in the sector. Okay, SEZL, Sezzle, GB, Global Blue, or Affirm or Toast. You can look at a bunch of others. So again, make sure you understand what you have in your portfolio. Now, long term, this is a list along with the recent 25-year anniversary of the dot-com bubble crash. There was a 5-year anniversary of the COVID crash low. Here's the Russell 100 10 baggers, okay? This means that you 10 times your money in 5 years. Okay? 5 years. What are some of these? Antero Resources is the number. Did you have that as your top stock? Probably not. Targa Resources, did you have that one as your top stock? Probably not. MicroStrategy, there is no freaking way I'm buying and holding MicroStrategy. But it's up 2,867% since the low. Matador Resources, I don't even know what they do. GameStop, a super micro. Did you hold through that entire time since the low? Probably not. Vistra is up 1,043%. Vertiv, VRT, which I do currently own and I'm at a loss at, that's up 1,216%. Dick's Sporting's Good, which by the way is next to BJ's here in a town called Cumming here in Georgia. And yes, Dick's and BJ's are in the same effing shopping center in Cumming, Georgia. So Broadcom's on there. Builders First Resources, Power. Again, that's a list of 10 baggers. Does it mean that you don't buy them now? Go and research them. Find stocks that still have room to run. Now, there are 19 stocks in the Russell 1000 that have been 100 baggers over the last 25 years. Not only did you make 1,000%, this is 10,000%. Okay? You would think this entire list would be freaking tech over the last 25 years. It's not. Monster Beverage is the number one. MNST. It's up $127,000. If you put $1,000 in there on 3/24/2000, you now have $1,275,000. Okay, Nvidia. Did you invest in 2000? Because if you put $1,000 in there, you now have 661,000. Again, you would think it's all tech. Tractor Supply Company, Old Dominion Freight, O'Reilly Automotive, Southern Copper, Clean Harbors, Cheniere Energy, LNG, which is liquid natural gas, Clean Harbors, AutoZone. So again, it doesn't always have to be tech, but those are big ones. And you should be looking at stocks like that have the opportunity. And how do I get stocks like that? I go over to AlphaPix, and AlphaPix has several of these, and you can look at them in the portfolio. So AlphaPix is hopefully my 10 and 100 baggers. So you've got to have your other ones. Now, I want to bring up a stock that probably is not going to be 100 bagger, but MLGO. I just want to bring this up. It's still going crazy. I brought this up because if we just look at 1 month, you'll see a huge spike, and it's still going. It's a short squeeze, 18% short interest. That's rather large, but it's still going crazy. It was up 39% yesterday. It is up 36% in pre-market to $33. Find a strategy that works. We'll do MLGO in the 65-minute algorithm. If this was, say this one hits your radar, you can take Trendspider and go into this one and say, you know what? Here's Gary's 65-minute algorithm. It got me in here at $5.79. Ooh, you know what? 1, 2, 3, 4. Just that was, let's see, March 24th at 10:35. On March 25th, right before the market closes, it got you out with a nice 85% gain. Got you back in 8% loss. It got you in again at 11. Again, you are trading at $33 freaking dollars right now. If you got in on March 27th, now you're up on this one. This is a Chinese company. It makes no sense whatsoever. They develop and apply central processing algorithm solutions to customers. The 52-week range is between $1.11 and $509. So it's not one that but again, you want to find a strategy. And if you find stocks like this, you can find strategies. That's the point. So I wouldn't be doing a lot today. I'm basically already there as far as being set up. But the 4-hour algorithm has worked for me in managing my portfolio. Seasonality has worked for me in managing my portfolio. The tools that I have worked for me in managing my portfolio, and that's Trendspider, Seeking Alpha, and Alpha Picks. It's worked. Is it working this year? No. But I know the reason why, and the reason why is because tech is just taking a hit. And has it run too much? Probably. But am I willing to take my entire, millions of dollars in a portfolio and change direction right away? No. I'm willing to put it out with a monthly chart. And the QQQ on a monthly, you don't even see this pullback. You don't. But if we break down below that 21 day like we did in 2022, you damn well know I'm taking some profits. And then I'm going to roll those profits into other safer areas. Maybe it's CVS. Maybe I get one of those receipts. I go and buy a Snickers bar at CVS and I get one of those receipts and I think, ooh, that was a pleasant experience because they no longer have cashiers. I no longer have to check out. I can just scan it and pay as I leave. And then I got another Snickers bar in my pocket. Boom, 2 for 1. That's what they tell me. That's what's going on in Atlanta, 2 for 1. So again, I don't know where this market's going. Nobody does. But I'm sticking with my portfolio the way that it is. And yes, I'm hurting. This is why you don't follow a douche on the internet. But if you have any questions, you can certainly hit me up on Linktree. Okay, my email's right there. You can also reply to the daily the newsletter that you get. Anytime you can comment. The chat, wide open. Wide open. You can just post something if you want. Reply to something. So if you have any questions, again, hit me up. I'm not looking forward to tomorrow. It's a coin flip as to what's going to happen. The market, may react great. I just don't think this stuff's priced in. If it goes big, we talked about it yesterday, how in 1987, 84, 1985, somewhere around there, it was almost 40 years ago, Trump was, ranting about tariffs or reciprocal tariffs. So I expect him to want to go big. Is somebody going to talk him down? I don't know. But I'm just not making big moves. Okay, that's it. I'll talk to you guys later.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.